This error is actually essentially a bug, a code error.
Crypto expert Tom Lee has just disclosed, he says, Bitcoin, Ethereum, and crypto are crashing due to a software bug.
And if prices fall, they've got to then do more selling.
If you have a friend or family member invested in crypto, highly recommend you send him or her this video. This affects them.
I think the crypto market has been limping along since October 10th.
And just as a reminder, Tom Lee's about to go into this, and then we'll react to it. But Tom Lee says this bug in the system, in the code, all started with the October 10th flush out.
Crypto had a huge deleveraging event on October 10th, and that was the biggest liquidation event in 5 years for crypto.
And now it's all starting to make sense. Here's why Tom Lee says the crypto market continues to tank.
I think the crypto market has been limping along since October 10th, because on that date was a negative shock. Today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. They act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it.
So the October 10th leverage flush out was not a normal crypto crash. Much like when Terra Luna, this was back before the FTX collapse back in 2022, much like when Terra Luna had that huge crypto collapse and flushed out the market, that wasn't the end. It was the start of the beginning. Because this broke something, people were levered up, and we had an unwind to go through. A market maker, like the name suggests, makes the market, finds the sellers with the buyers, matches them up, make sure there's liquidity in that pair market. And it's very interesting to think about that just a few days earlier, Bitcoin was hitting all-time highs, and then this flush out, which wasn't like the other crashes, changed something. And Tom Lee suggests it's a bug in the code. He literally says this.
All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. Stablecoin should stay at $1. It dropped to 65 cents.
And the stablecoin specifically that he's referring to that started all this was Athena's USDE stablecoin, specifically on the Binance exchange. This is how it started. The Binance flash crash. The price on October 10th briefly plunged for Athena's stablecoin to around 65 cents. Now it has since recovered pretty much, but one could argue this was sort of to a much smaller scale because Terra Luna was a Ponzi scheme scam. They just had a little depeg. Athena's depegging was the initial event because if you had stable coins, which are supposed to be stable, as your collateral, and then suddenly your collateral, which is supposed to stay the same value, dips by 40%, then you're going to be forced to liquidate because you couldn't back up your collateral in time. And the Tom Lee's saying the automatic systems automatically liquidated you.
Stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out as that spread across other exchanges, right? Because liquidations cascade. almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because, things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Brian, it is. For instance, in 1987, portfolio insurance was the, quote, glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks.
So essentially what Tom Lee is saying, and by the way, the likes, the views are exploding on this specific video because investors don't know about this. They need to know about this. If you have a friend invested in crypto, send them this video. It could save their life or make them at least understand. And by the way, Altcoin Daily is so close to hitting 1.7 million subscribers. It's completely free. It costs you nothing. And we share with you these breakdowns every single day. If you want an edge investing in cryptocurrency, click subscribe, because what Tom Lee is essentially saying is there was nothing wrong with any of the underlying protocols. Bitcoin, Ethereum, Cardano, Solana, all working as intended. They're not glitching at all. It's the processes of the traders, the market makers, the companies built on top of them. And he says a lot of this stuff is automated. And when they saw Athena's price, or they just got notified that a lot of people's collateral was suddenly 40% less, all this automated stuff just said, oh, we need to liquidate these traders. That's a bad bet. And the ADLs didn't specifically read, oh, it's a technical thing that a human would see. It's a technical thing, and actually nothing's really wrong. This got updated immediately. Yet all the traders still got liquidated, and that caused the issue. Tom Lee says that the glitch, the bug that needs to be fixed, is to make sure those ADLs or the market makers aren't reading just one price feed on one specific exchange. Why not take the aggregate of all exchanges? I don't want to sound like a broken record, but to me, this is a buying opportunity. Understanding that nothing is fundamentally wrong with the underlying technology, it's just sort of a mini black swan event that caused this leverage flush out, and now a lot of these market makers are underwater because a lot of their people got collateralized and they're forced sellers.
But now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks.
It just means a buying opportunity to me. I will be reading, if you made it to the end of this video, comment grape, purple grape, to let me know you made it this far. I'll be responding to as many comments as I can.